Welcome back. And if this is your first time here, well, welcome. Today, we're going to be discussing a tool that can play a significant role in your retirement planning. It's called whole life insurance. In this video, we'll explore the benefits of whole life insurance and how it can be a valuable addition to your retirement plan in Canada. Here's the quick version of how it works, and then I'll get into more detail. So you start by overfunding a participating whole life insurance policy with the goal of growing the cash surrender value. Then in retirement, you're able to access this cash value in different ways, including withdrawing the money, taking policy loans from the insurance company, or leveraging the cash value with a third-party lender like a bank. When you leverage your insurance policy with a bank for retirement purposes, it's called an Insured Retirement Plan, or IRP. So now let's get into more detail of how this all works. So we'll start with, what is whole life insurance anyways? This is a type of insurance. It's a permanent insurance that provides coverage for the rest of your life so long as you're paying the premiums. And it's just like the name says, whole life. One of the key benefits of whole life insurance is the cash value component that we talked about. So this means that a portion of the premiums that goes into the cash value account grows over time through a dividend. And that growth comes from the investments that are made by that insurance company's participating account. The cash value can be accessed through policy loans or withdrawals or leverage from a third party like a bank, which gives you access to funds in retirement. Another benefit of the whole life insurance is that it's a tax efficient way to save for retirement. Cash value component of the policy grows tax deferred. So this means you don't pay any tax on the growth until you withdraw the funds. But when you leverage against the cash value in your policy like we show you, you never actually withdraw the funds. So that taxable event doesn't need to happen. Then additionally, the death benefit paid to your beneficiary is tax-free. So you're able to grow the money in the policy on a tax-deferred basis, and then you're able to pass it down to your kids or to whoever your beneficiary is tax-free. So like I said, when we set up these insurance policies for you to fund or to supplement your retirement, it's called an Insured Retirement Plan. Now, I didn't invent this name. Insured Retirement Plan is a bank name for the type of loan that the bank will give you against the insurance policy that's been properly set up to generate this high cash value. So I mentioned earlier that we show you a way to never withdraw the funds in your whole life policy so that that taxable event or the withdrawal never happens. Well, here's how that works. Once you've built up a significant cash value in your policy, you can actually take that policy to a bank as collateral for a loan. And when you're past a certain age, which is 50 or 55 or 60, depending on the different bank rules, you can take these loans every year. And the way that an IRP loan is set up, the bank will monetize the interest payments, meaning that they add the interest owing on top of your loan. So you don't actually have to make annual interest payments. The bank is still charging you interest, of course. They're just adding it to your loan instead of asking you to pay every month or every year. And because the bank is holding your life insurance policy as collateral, what they do is they just wait until one day you're going to die, and then they collect whatever outstanding loans and interest is owing off that death benefit. So using a life insurance policy to help with your retirement income is a great idea for the right person because you're able to grow your money tax deferred for your entire life, and you're able to access that money in a tax efficient way through loans in retirement. And then when you pass, the death benefit pays out tax-free minus any loans and interest. In conclusion, a whole life insurance policy can be a valuable addition to your retirement plan in Canada. With its cash value component, the tax efficiency, and the ability to provide a source of guaranteed income, it can play a significant role in helping you achieve your retirement goals for the right people. I should address this, like who is the right person to use an IRP retirement income strategy and who shouldn't. So this is an advanced strategy that should only be done by somebody with a sophisticated understanding of money, collateral, and debt. This is generally not somebody's only source of retirement income. They would have other income from other sources like rental properties or a stock portfolio or businesses or some other retirement income. The IRP strategy would be a tax advantage supplement to their income and not the entire retirement strategy. The IRP strategy would also be using excess funds to implement this strategy like this, right? It definitely wouldn't be using all of your funds to implement a strategy like this. Now, who shouldn't do this? Well, somebody who's not financially sophisticated and doesn't have a good understanding of how money works and the risks associated with using large amounts of debt. We sometimes get people in desperate situations that are looking for a Hail Mary to fix their retirement situation. This is definitely not for you if this is the case. Someone who doesn't have other assets generating income for them wouldn't be a good candidate for this because there's interest rate risk and the funding requirements to get this set up can be high and they need to be consistent over an extended period of time. But for the right person, which is usually an entrepreneurial type of person or business owner, this can be a no-brainer if you set it up properly with the right contribution amounts set up over the right time horizon. If you want to know how whole life insurance can fit into your overall retirement plan, click the link below the video and fill out the contact form on our website. As always, if you got value from this video, please click like, subscribe, comment, click all of the buttons. This tells the algorithm and the robots how much that you love us and that they should show this video higher up on the feed for more Canadian business owners and professionals. Thanks a lot, and I will see you next time.